Hey guys, so today we will discuss about vehicle insurance policy in United States, especially car insurance and its importance. So the car insurance or automobile insurance in the United States and elsewhere is designed to cover the risk of financial liability or the loss of a motor vehicle that the owner may face if their vehicle is involved in a collision that results in a property or physical damage. Most states require a motor vehicle owner to carry some minimum level of liability insurance. States that don't require the vehicle owner to carry car insurance include Virginia, where an uninsured motor vehicle fee may be paid to the state. New Hampshire and Mississippi, which offers vehicle owner the option to post cash bonds. The Privileges and Immunities Clause of Article 4 of the U.S. Constitution protects the rights of citizens in each respective state when traveling to another. A motor vehicle owner typically insures a monthly fee, often called an insurance premium. The insurance premium a motor vehicle owner pays is usually determined by a variety of factors, including the type of covered vehicle, marital status, credit score, whether the driver rents or owns a home, the age and gender of any covered drivers, their driving history, and the location where the vehicle is primarily driven and stored. Most insurance companies will increase insurance premium rates based on these factors and less frequently offer discounts. Insurance companies provide a motor vehicle owner with an insurance card for the particular coverage term which is to be kept in the vehicle. In the event of a traffic collision, as proof of the insurance, recently states have started passing laws that allow electronic versions of proof of insurance to be accepted by the authorities. Coverage generally, consumers may be protected by different levels of coverage depending on which insurance policy they purchase. Coverage is sometimes seen as 20 by 40 by 15 or 100 by 300 by 100. The first two numbers seen are for medical coverage. In the 100 by 300 example, the policy will pay $1 lakh per person up to $3 lakh total for all people. The last number covers property damage. This property damage can cover the other person's vehicle or anything that hit and damage as a result of the accident. In some states, you must purchase personal injury protection, which covers medical bills, time lost at work, and many other things. You can also purchase insurance if other driver doesn't have insurance or is underinsured. Most, if not all states, requires drivers to carry mandatory liability insurance coverage to ensure that their drivers can cover the cost of damage to other people or property in the event of an accident. Some states, such as Wisconsin, have more flexible proof of financial responsibility requirements. Commercial insurance for vehicles owned or operated by businesses functions quite similar to private auto insurance, with the exception that personal use of the vehicle is not covered. Commercial insurance pricing is also usually higher than private insurance due to the expanded types of coverage offered for commercial users. Insurance providers. So now we will talk about insurance providers in the US. In the United States in 2017, the largest private passenger vehicle insurance provider in terms of market share were State Farm 18.1% share, GEICO with 12.8% share, Progressive Corporation with 9.8% share, Allstate with 9.3%, and USAA with 5.7%. Insurance is secured either by working with an independent insurance agent or with an insurance broker who is authorized to sell insurance policies. Some can represent from several agencies or a growing number of. So, liability coverage. Liability coverage, sometimes known as casualty insurance, is offered for bodily injury or property damage for which the insured driver is deemed responsible. The amount of coverage provided, a fixed dollar amount, will vary from jurisdiction to jurisdiction. Whatever the minimum, the insured can easily increase the coverage. for an additional charge. An example of property damage is where an insured driver or first party drives into a telephone pole. In this example, the driver's insured may also become liable for other expenses related to damaging the telephone pole, such as the loss of service claims by the telephone company, depending on the jurisdiction. An example of bodily injury is where an insured driver causes bodily harm to a third party and the insured driver is deemed responsible for the injuries. However, in some jurisdictions, the third party would first exhaust coverage for accident benefits through their own insurer, assuming they have one, and or would have to meet a legal definition of severe impairment to have the right to claim under the insured driver's policy. If the third party sues the insured driver, liability coverage also covers court costs and damages that the insured driver may be deemed responsible for. In some states, such as the New Jersey, it is illegal to operate or knowingly allow others to operate a motor vehicle that does not have liability insurance coverage. If an accident occurs in a state that requires liability coverage, both parties are usually required to bring or submit copies of insurance cards to court as proof of liability coverage. In some jurisdictions, liability coverage is available either as a combined single limit policy or as a split limit policy. So, combined single limit. A combined single limit combines property damage, liability coverage, and bodily injury coverage under one single combined limit. For example, an insured driver with a combined single liability limit strikes another vehicle and injures the driver and the passenger. Payments for the damage to the other driver's car, as well as payments for injury claims for the driver and passenger, would be paid out under this same coverage. Split limits means the split limit is a liability coverage policy that splits the coverage into property damage coverage and bodily injury coverage. In the example given above, payments for the other driver's vehicles would be paid out under property damage coverage and payments for the injury would be paid out under bodily injury coverage. Bodily injury liability coverage is also usually split into a maximum payment per person and a maximum payment per accident. The limits are often expressed separated by slashes in the following form: bodily injury per person by bodily injury per accident by property damage. For example, California requires a minimum coverage $15,000 for injury death to one person, $30,000 for injury death to more than one person, and $5,000 for damage to property. This would be expressed as 15,000 by 30,000 by 5,000. Another example, in the state of Oklahoma, drivers must carry at least state minimum liability limits of 25,000 by 50,000 by $25,000. If an insured driver hits a car full of people and is found by the insurance company to be liable, the insurance company will pay $25,000 of one person's medical bills, but will not exceed $50,000 for other people injured in the accident. So, ladies and gentlemen, this was